Alright, the first rule, avoid a glass-full mindset. Put aside whatever you know about traditional technical and candlestick analysis first. And I believe some of you have learned certain methodology elsewhere. And my advice is that in the price action manipulation course here, first learn and be committed to whatever that you got to learn over here. Okay, so if after the course you find that you can actually complement whatever that you learn with your existing knowledge and it helps you to improve your trading performance, by all means go ahead and I'll be happy to learn how you do it as well. Okay, so take responsibilities for your actions, and this is what I always tell my students, right? That your performance dependent on your own sacrifice towards practicing whatever that's taught. Okay, so a lot of people actually ask me how can they achieve certain amount in a fixed time frame. If you want to achieve a lot in a shorter time frame, then you have to put in a lot of more sacrifice towards practicing whatever that's taught. I would say that on average, a trader will take about 6 months to internalize this new methodology, about 6 months. So that in these 6 months, you can see the entire up cycle, sideways cycle, down cycle in the 6 months, right? So it's not a get rich quick scheme. There's going to be certain learning curve. But what I can reassure you is that once you understand and internalize this skill set, it's going to be inside you forever. And it is something that no one can take away from you. Okay? And all students will do this later on in one of the lessons. Later on, you're going to set this thing called the trading plan construction. So you're going to understand how much you expect to make per day, per week, per month, per quarter, per year from your trading to set realistic expectation from the start. And all traders must earn the right to trade for a living. So trading is also a specialized profession, just like a doctor, dentist, right? Who go through many years of training to become a doctor and practicing to become a doctor, right? So there's going to be certain learning curve in trading as well. In fact, after the online course is just a start, right? It's just a start where you start to execute and take action to internalize whatever that's being taught to you. Okay, so again, I want to emphasize that the light at the end of the tunnel is that once you internalize whatever that's being taught here, right, will change the way you trade and look at the markets. And most importantly, be patient, right? Because we cannot rush a trade. You can never rush a trade. Once you enter the trade, you have to let it time to pan out to get the feedback. Same thing when you're learning, be patient. One of the things, my advice that I learned before is that as long as you make one small step a day, in the long run, it's going to be a big step. Okay, so aim to improve every day, whether it be in terms of learning the strategy, risk management, or understanding psychological management. Okay, learn every single day and improve every day. Every small step counts. And in trading, there's only 3 outcomes: win, lose, or draw. There's no need to be too happy when you make money. There's no need to be too upset when you lose money as well, right? But what we want as professional traders is that we all have our wins and loss. I have lost big money before, but I also have made big money before. But I came out ahead because I make more than I lose. And all traders will have win and lose along the way. The most importantly is to understand that once you have an edge, in the long run, you will be profitable. And I'm going to leave you this quote by Dr. Van K. Tubb, who is a very famous psychologist who trained hedge fund traders in the US. And one of the quotes that he mentioned in his book, right, he said that a peak performance trader, I'm just going to highlight here, I'm just going to use blue. A peak performance trader is totally committed to being the best and doing whatever it takes to be the best. He feels totally responsible for whatever happens and thus can learn from mistakes. These people typically have a working plan for trading because they treat trading as a business. So as peak performance traders, we all must be committed to being the best. That means you create a lifestyle, right? Create a lifestyle and a hunger to learn whatever you need to learn from trading and take action whenever possible and to practice whatever that you are being taught. Okay? And we treat trading as a business because there's going to be win and lose. The most important thing is that it's a game of probability. As long as you have an edge, you will win the long run. And some thoughts about trading for a living. I know there's a lot of words here, but I just want to emphasize a few key important points, right? Risk comes from not knowing what you're doing. So for those of you who are new to trading, taking on risk is the function of traders. It is our core function. If there's no risk, there's no gain. However, the thing is not about taking risks. The thing is about taking calculated risks, right? If you are presented with an opportunity where you can make a high risk reward, and with a high win rate, this is a trade that you must always take. I repeat again, if you are presented with an opportunity to take a trade where there is a high risk reward, okay, and then there is a high win rate, you must take this trade anytime, because this is a trade that has a high probability of success. And as traders, we must always take this kind of trades. There's no such thing as 100% sometimes in trading. There's no 100%. But what we want is a high chance of winning, right? So we will take on risk whenever there's a high chance of winning. We are the masters of risk and our emotions. And for every human weaknesses that's counterproductive to trading, we recognize it and control it with our logical mind. So in trading, right, it's also a constant battle with your emotions because money is involved. And believe it or not, I think most people are very emotional when it comes to money, right? Whether you're making it or even when you're losing it. So it's a constant battle with the trader itself, and hence there are certain things that we do in trading to make it systematic. And for example, I'm going to teach you how to put in this thing called the OCO order. So once you enter the trade, you can remove emotions from the trade itself. Okay? And all traders must go through the learning curve. So there's no shortcut. Unfortunately, there's no shortcut. The only thing is to go through this learning curve in a short manner, right? To shorten this learning curve. It's not that there's no learning curve, it's just that you can either choose a long one or the short one. So you're going to learn in this course strategy, risk control, and mental toughness. Because like I mentioned again, right, your performance will depend on your understanding of the strategy, your ability to control risk, and also your mental toughness in the face of profit and loss, how you handle wins and loss along the way. And in our methodology, this is very important, right? Is that we believe that incentive drives behavior. And the reason why I came out with this set of strategy to trade the markets is because I believe that the incentive of the big boys is what drives the market, is what drives the prices in the market. And we devise this strategy to trade alongside the big boys or the market makers. So who are the market makers? Basically, market makers buy and sell securities that are being displayed in the exchange trading system for their own account, right? So they provide liquidity to the market. So I'll just go and explain in a layman manner, right? So for example, if you are going to holiday in Thailand, right? You're going to exchange, if you are Singaporean, you're going to exchange your Sing for Baht. So when you go to a money changer, the money changer allows you to exchange your currency, right? But the money changer don't do this for free, right? In the process of providing you this service for changing your Sing currency to Baht, the money changer make this thing called a spread, because there are people who are buying and selling to them as well. So they make money off this spread. Same for the market makers. So when the market makers are providing the buy side and the sell side, right, for people to buy and sell the stocks or the assets, they make money off the spread. But however, the market makers don't just make money from the spread, they make money from moving the prices as well. Because when a trader put in orders, when we traders put in orders into the exchange, right, we are trading against the market maker. The market maker controls more than 90% of the liquidity in the product that they are trading. So they know exactly who are at which level, okay, how many traders are at which level, and whether they want to take out their stop loss, right? So if the market makers knows that everyone is at $1, stop loss is at 90 cents, what do you think the market makers will do, right? If I'm the market maker, I'll definitely go and chase those who put stop loss at 90 cents, right? Before I want to move, even if I want to move the prices up. Make sense, right? So we're going to learn more about the market makers, to basically use a strategy of price action manipulation to trade alongside with them. Okay, so let's first understand what's the difference between trading and investing over here. So the goal of investing is to build wealth over an extended period of time. So I also do investments and I do trading. Right, trading is for me to produce income over consistent periods of time, multiple periods of time. Right. So for investing, right, is basically for me to hold a position for many years. Right. So over here in price action manipulation, we'll be doing our methodology is focused on generating profits consistently over a week, month, quarter, or even year, right? You're doing short-term trading and even swing trading. So trading is a game of probability, like I mentioned earlier, right? The edge comes from your strategy management, risk management, and also money management. It's just like in a casino, right? In a casino, right? All of us know that the casino will always make money, but why do we still go to the casino? For the thrill, for the thrill seeking people, right, who wants to gamble, right? But we all know that why is the casino is not afraid that people gamble with them. It's because the casino knows that they have an edge. And when they have an edge, it's just a game of probability. They know that in the long run, they will make money, right? In the long run. That's why when you go to casino, when you make money, right? The casino will not say, please go home, right? The casino will ask you to stay longer in the casino because in the long run, they know that as long as you stay long enough, you will definitely lose money. Same thing in trading. We aim to be the house, right? Aim to be the casino. But the good side about trading is that we have a choice to go into the trade when we have the edge, right? But in the casino, we don't have the choice. So I just want to leave you with this, okay, to get understand that a good trader is not necessarily a profitable trader. You must be wondering, oh shit, what? A good trader is not a profitable trader? So the thing is that a good trader at the start may not be profitable. My point is that a good trader at the start may not be profitable because he may be learning the right thing, but he may be just break even or lose a bit of money. But as a good trader, he will not burst his account, and he may not make a lot of money at the start, but he probably is still learning. He's still learning the concept, the skill set, and so on. Right? A good trader the win rate may range between 30% to 50%. Okay, a new trader. A more seasoned trader will range between 50 to 60% or even 70% for a very seasoned trader, right? So a profitable trader is not necessarily a good trader because just like a casino gambler can go into the casino and still make money, right? So a trader who is not doing the right thing may still make money, but we believe that in the long run, if a trader is not doing the right thing, eventually he'll lose the money. So a good trader will eventually become profitable. This our belief is that if you are doing the right thing, you are doing the right concept year in, year out, you will be profitable eventually, right? And a bad trader will, of course, eventually become unprofitable. Okay, so you are going to be trained to be a good trader at the start because I want you to last long in the game. And because trading is not a game that is going to be last a few months, you can do this all the way until retirement, right? For many years to come, and you need to understand the concepts to last long in the game and to do the right thing. Okay, so what's the stock market before we begin? So understand that in level 1 we're going to cover mostly on swing trading stocks. Okay, level 1 we're going to do mostly on swing trading stocks. Level 2 we're going into commodities and futures and more techniques on scalping techniques and swing trading techniques. Okay, in other asset classes as well. So for over here, we just want to let you understand that for the stock market, I trade mainly the US market. So I trade through the New York Stock Exchange, Nasdaq, Amex. In Singapore, I trade through the Singapore market, and there's also for Japanese traders, you trade through the Tokyo Stock Exchange, for example, right? If you're in Hong Kong, you trade through the Hong Kong Stock Exchange as well. Okay, so you also learn that the futures exchange is where futures contracts are being traded. So futures contract are your index futures, your energy futures, your precious metal futures, your forex futures. They're all listed in, for example, in CME Group or even SGX itself. Again, I'll mention that I'll only be covering futures in level 2. Okay, so what is the term counterparty? So counterparty basically is the person on the opposite side of the trade. So as you all know that the market makers control more than 90% of the liquidity in the market. So your main counterparty in the market that we all believe is that the market maker is your main counterparty. You have 90% chance of hitting into the market maker. less than 10% chance of hitting into a retail traders just like you. Okay. So what's the derivatives? So to understand over here that okay, the most basic fundamental product over here is stocks and forex. We call it the underlying. So the technical term, the lingo we use is called the underlying. The underlying is stocks and futures. So the term derivatives means that it's derived from the underlying. Is derived from the underlying. So financial people actually created many forms of derivative to cater to certain needs. For example, in Singapore, okay, in my country in Singapore, I cannot short. That means I cannot short a stock and hold it overnight. Okay, that's an exchange rule. So financial people actually introduced this thing called a stock CFD. So it is the same product, but it's called a stock CFD. The price is the same, the quotes is the same, but it allows me to do a short trade overnight. So basically, it's just another kind of product that allows you to cater to a certain need. So financial people also created index futures, stocks options, and so on to cater to different needs. But they all derive from the underlying most basic product called the stock itself, right? And we also have forex. So spot forex is the most fundamental product. So you also have CFD on forex futures and even options. So they are what we call derivatives. But in level one, we are going to cover again mostly on stocks itself only. Okay, of course you can also use stock CFD to trade, which I'll share with you along the way. If you need to use stock CFD to trade, you can also use stock CFD to trade as well. Okay. Some stocks that's in my country, Singapore. These are stocks in Singapore and in the US, right? Household names in the US. And I just want to emphasize here, for those of you who are new to trading, the term equities, stocks, or shares are the same. When I was young or younger, right, I actually didn't understand the difference between these three equity, stocks, and shares. But after a while, I realized that they meant the same thing, right? So, what is the kind of types of traders out there in the market? So in the market, we have the day trader, or we call them the intraday trader, or we can call them the short-term trader or scalper. What it means is that they take a trade, they will get the feedback within 24 hours. And usually these traders trade the 1 hour and below chart. That means the 1 hour, 30 minutes, or 15 or 5-minute charts. We call it the natural time frame. Okay, so the feedback is less than 24 hours. So we can use the term, call him the day trader, intraday, short-term, or scalper. So I also do short-term trading every now and then whenever I see a setup in the market as well. Okay. And we also have a group of traders called the position or swing trader. Position or swing trader. So basically, these are traders who hold the trade for more than a day, right? To up to probably a few months, right? If you are doing, let's say, the day chart, your feedback will come less than 1.5 weeks. That means you're doing the day chart, the 1 year, 1 day chart, right? If you are trading on the daily time frame on stocks, you'll get a feedback in average around 1.5 weeks. That means you get whether the position, the price hit or target or stop loss in less than 1.5 week. If you do the swing trading on the 4 years, 1 week chart, you'll get a feedback in around 1.5 months. Okay? 1.5 months, sorry. So I just want to emphasize here is that it doesn't mean that the short-term trader make more money than the swing trader. Okay, but of course, the short-term trader will have more trades. So it really depends on your lifestyle. There's no right and wrong. It really depends on your lifestyle. My lifestyle right now, I do mostly swing trading. Okay, because it's more of end of the day trade. So I only need to monitor less than half an hour a day to put on my positions. So that suits my lifestyle right now. But of course, in the trading desk, I do mostly on short-term trades. But the mental models, the risk management, and the techniques of trading are still the same. So find a style that suits you, suits your lifestyle. There's no right and wrong. It's just that on the higher time frame for swing trading, generally traders will do a bigger trade to compensate for the lesser in frequency. Okay, I'll give you an example. Let's say the short-term trader do a trade and risk $100, and the swing trader, right, do a trade and risk $1,000 per trade. So if the short-term trader do one trade, it's equals to the swing trader do 10 trades. Is the short-term trader has to do 10 trades that is equals to one trade that the swing trader is doing. Putting it in other words is that the swing trader do one trade is equals to the intraday trader do 10 trades, right? So you compensate it on the higher time frame by doing a bigger size, all right? And so it's also in the market, right? You will be learning how to put in this thing called the GTD order and the GTC order. GTD order means that, okay, so now the US market opened at, now because there's no daylight savings, the market opened at 10:30 a.m. Singapore time to 5 p.m. Singapore time because there's no daylight savings. So if I put my orders after 10:30 a.m., I put a buy order, for example, I want to buy a stock, right? I put a buy order. By 5 p.m., sorry, it's not 5 p.m., it's 5 a.m. It's 10:30 p.m. to 5 a.m. Singapore time, okay? So by 5 a.m., if my order is not filled, right, the trading platform will cancel my order because I set it to end of day only. However, if I set the order as GTC, put to cancel, the order, my buy order will be there forever until I close it myself. So if I don't close it, it will be there forever and ever until it gets filled. Understand? My 9% of the time in the price action manipulation, you're going to put in this GTC order. Okay, you're going to put in this GTC order so that it helps in terms of psychological management of the trade. Once you enter the trade, you can just walk away. Okay, you can just leave it and walk away until you get a feedback. Okay? And just to understand that we won't be using this thing called fundamental analysis, right? So fundamental analysis means that we look at things like accounting measures such as earnings, season, cycles, sector rotation, sales, earnings per share, and so on. So in price action manipulation, we won't be looking at all these things. We'll be really focused on just the price analysis of the charts. Okay, so really just looking at pure price charts to decipher our entry and exit decisions. Okay, to do our trading. And it's what we call directional trading. So what you learn is what we call directional trading to establish a view in any asset class. So you can use it in any asset classes, stocks, CFDs, FX, futures, options, and cryptocurrency. Okay, we'll be mainly covering level 1 of stocks, and for Forex and futures, we'll be doing it in level 2. You can apply it in any other asset class over here. We call it directional trading, okay? And just some very basic things about buying and selling over here, right? When we say long, right, means that we buy. So if you long at 49.90, means that you expect and you want the price to go up. And if the price goes up above 49.90, for example, over here, you make money. If it goes down, you lose money. So in directional trading, right, there's only 2 dimensions, either up or down or flat, right? So it's either win, lose, or draw, like what I mentioned earlier, right? So when you say that you are short means you sell a position, right? The term is called, lingo is called short. So if you are short at 49.90, it means that you want price to come down. You want the price to decline. If the price goes down, you make money. If the price goes up, you lose money. So you establish 2 views, long or short, in the market. Either views based on the setup that you're going to learn. Okay. So what do I mean when I say I'm bearish or bullish? So like my traders, we all know that this year I'm bullish in the market. I'm bullish in the market because the flow of the market, you're going to learn the flow in the next lesson, right? When I say the flow is bullish, which means to say that I'll be taking more long trades than short trades. It doesn't mean that I'll just go and buy, just anyhow go to the market and buy. I'll just be more positioned to take on more long setups than short setups. That's it, right? It's just a directional bias that we have in the market, okay? And of course, how you make money from the market, you can buy low, sell high, buy low, right? Right? You may be telling me the obvious, right? But I just want to share with you that, okay, there's also one way to make money in the market. In fact, this is something that actually changed the way I look at the markets as well when I was a professional trader. In the trading desk, I learned that No, one of the most effective and easiest way to trade is to buy high, sell higher in no man's land. No man's land. No man's land means there's no price action, there's no charts, there's no price action on the left side of the chart, and price is drifting up higher and higher. When price is drifting up higher and higher in no man's land, that means making all-time high, breaking all-time high, right? Like what the Dow Jones is doing right now, the indexes are doing right now, right? You generally would tend to have, it's much easier to do a buy because there's a high chance that the market may what will do this thing called a flush up, which is a rapid price movement upwards. So that's what we mean by buy high, sell higher, right? That's when traders make a lot of money when they are doing longs in the market. Okay, so doesn't mean that in between you cannot trade. It's just that in between, right, are just normal trades that you have to take profits whenever you hit your risk reward. But when you buy high and sell higher, right, you can always put an open target. That means you can wait until the price action forms to take the profits. You're going to learn more about this in the subsequent lessons as well.